Welcome to today's presentation, where we have the pleasure to present Inderes to help us through today's presentation. We are joined by you, CEO Michael Laursen. Today's presentation, your half-year report released, I think, showed strong momentum in Q2 on both the top line and the bottom line, but I guess also a little bit of the phasing of the Easter, unfortunately, can explain that probably. But let's be wise on that. As always, you are encouraged to ask questions in the box down below during the presentation, but we will take most of the questions in the end. But I think for now, I'll hand the call over to you, Michael.
Thank you, Michael. Good to see you again. Thank you, everyone in the audience, for joining. And questions very welcomed as usual. And happy to share our first half results with a new facelift we've done for our brand and also a new Inderes shirt. So let's move on to the January to June results. First half, overall, all the kind of like main financial indicators moving to the right direction, and bit of a acceleration on the second quarter. We're very pleased with 17% organic growth and double EBITDA. As you said, with a year-on-year comparison, we had a bit of a tailwind on the second quarter because of the timings of the AGM production. So the AGM season was this year a bit more weighted on the second quarter, as we indicated on the previous call. But overall, we're growing in a shrinking market, like more companies going out of the stock exchange than coming in at the moment. And why are we growing despite the conditions is that after IPO, we started to invest a lot in our new products and expanding the product offering. And those investments are slowly starting to be reflected in our organic growth, particularly strong growth in the AGM product and investor relations software. So that's something we're really happy with. And in the second quarter, also in the events business, that business area has been struggling with a very challenging market after the COVID restrictions were lifted. We're now seeing some small signs of demand picking up slightly, but there I need to remind that the visibility and order backlog in this business is relatively short. So in that business, things can change quite rapidly, but for now, it looks good. Sweden, we're growing. It's moving forward. 12% growth. However, that is not what we're aiming for. That is not what is our ambition level. We didn't go into Sweden market to grow 12%. Of course, our long-term potential and ambition are far beyond the current pace, and that's what we are working on very hard to get the growth engine started real time in Sweden. But overall, we can be satisfied with the first half of the year. Moving on to the Inderes flywheel, not much news on this front. So the number of customers on the listed company side of the platform growing year on year. So some companies leaving because of buyouts and some small customer churn, and that being offset by wins of new clients. Number of Inderes active community members, that's growing year on year because it was bottoming out a year ago. Quarter on quarter, it's relatively flat. We expect that number to decline in the upcoming quarters, and that is because we've transferred our service to a new platform, new technical platform, and on the new platform, the content is more accessible and more open than in the old platform. So users don't need to log in to access the same content. So we haven't been that aggressive in pushing users to log in, which we expect to be reflected in that number. Looking at the traffic on our website, how active users are, I'd say that's not declining, but it's neither growing. It's been relatively stable. Our headcount is 119. It's been relatively flat for a while, so we scaled up the organization quite a bit after our IPO 3 years ago. And with the current capabilities and resources we have in this organization, we believe we have good capabilities to execute on the strategy we have outlined in May last year. Moving on to different business areas. So we have 3 business units: equity research, events, and AI software. Starting with equity research, this business is very much Finland focused, and it's being challenged by the market conditions in Finland. So quite a lot of delistings on the stock exchange. Despite that, we're growing the contract portfolio, and that is thanks to winning a few new clients in Finland. The last ones we haven't yet gotten, we've been able to win, and also the new contracts in Sweden. So we've been winning contracts in Sweden, but I need to say that it's not going as fast as we are expecting it to go. So we need to pick up the pace in commissioned research contracts in Sweden. Starting this business from scratch is always a really, really hard work that we've seen when we started this in Finland. The first 10, 15 contracts, that's the most difficult part to build the brand recognition and name on the market. But that hard work continues. In Denmark, happy to say we've reached a small milestone on the equity research front. So HCA published the first commissioned research using the Inderes tools, Inderes and Inderes model of doing research. So that side is opened as well now. Revenue-wise, the research business, it's been stable and with a good profitability. So despite the contract portfolio growing, the revenue is stable. That's because of a decrease in project-related revenue. So the recurring part is growing. Moving on to events. Events business revenue increasing both in Finland and Sweden. Profitability is at a very good level for an event business. In Finland, we're happy that our market position has been strengthening, especially with our AGM offering. We've been able to offer wider projects for the AGM event productions, and that has been growing. And also overall, we're seeing that the demand for hybrid type of events and online events is slightly picking up as we speak. So what happened in this business when COVID hit? It was a huge boom in demand, everyone going to online events. And then when the COVID restrictions were lifted, there was a bit of a pullback, clients going back to physical-only events. And that's a business area where we don't work because we're in the business of democratizing information, and everyone should have access to information. So especially in investor relations, it's always a hybrid or online event to allow everyone to access the information. So we're in the hybrid and online business, and that kind of like pullback affected us. for a long time, but now we're seeing, and maybe some clients are also noticing that there's actually many good parts in doing your events in a hybrid way, and that is being reflected on that. And also, Capital Markets Day season is an important element for this business area. Software part of the business, growing very strongly, revenues, and we actually reached break-even profitability in the first half. So after several years of very heavy investments, negative profitability, now very encouraging that we're already reaching a break-even. That is, of course, supported by the license sales of AGM software in the first half, because that is very much weighted on the first half of the year. But anyway, this is something we can be very proud of. We started to build this business from scratch 4 years ago, and now we're seeing we have a really strong team. We have great client references. We have very satisfied and happy clients, and we also have good commercial traction on this business area. So that's something we can be very, very happy with. And on the first half, we continue to strengthen our position in the AGM market in Finland. So that business area used to be dominated by one player in the market, and we've been rapidly able to take over very big part of that market with our very good product offering in just a couple of years. So I think that also demonstrates both the innovation and execution capabilities we have in this company. Also, the IR website and press release system growing strongly in Finland. So the strong growth I'm speaking about here is very much driven by Finland, and in Denmark and Sweden we're on a piloting / market research phase with this business. I like to say that with the software side, we do have capability to build it into a good and profitable business in Finland only. But if we can reach a Nordic scale, then it can be very valuable and profitable business for us in the long term. All right. Any questions, Michael, at this stage, or should we move on?
No, yeah, I was thinking a little bit about what is it that are driving the event business outside the AGM? Is that purely macro? Is that what you're looking at? The better the macro, or is it also that the demand is coming a little bit back for hybrid events? And you mentioned the CMD season, Capital Markets Day season. I guess that's a normal part of your business, but you know, the event business that has gone away and maybe starting to come in a little bit again. What are the drivers behind you might say, if I as an analyst should say, if this gets better, then this business probably also gets better?
Yeah, definitely there's a macro element, and also somewhat that's more difficult to put a finger on the how much it affects like the event industry trends in general. Last year in the second half, we saw customers like literally pulling the handbrake in all spending, and that was very much reflected in the event business. So that was very macro driven. When clients need to save money, they either cancel or postpone the events, or don't make them as big as they planned, so they save costs there. That's something we see. And then when it comes to investor relations, of course, that's somewhat obvious that when the company is performing well, they are happy to spend more money on investor relations, and when they are not performing well, they don't usually want to make that fancy and nice looking events and so on, or even hold a capital markets day, for example. So
I guess
there is a macro element.
It's a big part of this equation outside, the AGM and investor calls, I guess. Is that correctly understood?
Yeah. And what brings stability to that business is of course AGM, because companies need to hold AGMs every year, no matter what the macro situation is, or even the pandemic situation. And then the quarterly presentations, they are of course very strong recurring element in that. But everything outside those two is more or less predictable business, I'd say.
And there must be some pent-up demand, You can postpone a CMD 1 year, but it's not normal for a lot of companies not having a capital markets day for 3 years and then coming out. Yeah, that makes a lot of sense. And the other one was, now you said you will break even profitable on the software side. I guess it's not all recurring revenue that is lying in the software, because there's also some elements that you're selling. But is this half year profitable and at full year maybe? But have you reached a level where you might now say in a normal software business, when you reach a certain level, then it's so stable that you can say it's profitable from now on? Or is it a little bit about the phasing and a lot of the AGMs, I guess, software lying in this quarter?
I need to think how much I can tell about that. But yeah, the first half there's a big impact from the AGM license sales, and that is project revenue. But of course it's kind of like recurring project revenue. So that's supported, and that we don't have in the second half. But the recurring revenue base in that business is growing also very, very nicely.
I will not ask you anymore. I know if you don't guide in an area, you are not allowed to tell me whether you are profitable full year. So I will let you off the hook. Let's look a little bit at the financial figures, and then I have a little bit more questions.
Yeah, I'll walk through these quite quickly, so a bit more detail on the financials. First half, first of all, so Sweden now representing 21% of revenue and recurring revenue 55%. So the project revenue on this half grew a bit faster than the recurring revenue. Cost-wise, on the materials and service level, with the big event productions and AGMs, that's the biggest driver on that cost. Otherwise, we've been able, as planned, keep our fixed cost relatively stable, which is why the profitability has been improving, especially in Q2. Adjusted EPS up to 50 cents from 34 cents last year. So really good growth there. And here I'd like to highlight why we report the adjusted EPS. We're reporting under Finnish accounting standards, which means that the acquisitions we've made in the past, we amortize the goodwill from them every quarter. So depreciation of consolidated goodwill, that's an accounting item that affects our number. So we think it's fair to adjust the EPS from that accounting item to reflect the true performance of our operations. Then on the second quarter, 70% growth. So, and that's fully organic. Last year there was a strong non-organic element in the growth from the acquisitions, and a significant improvement in the profitability, because the cost base has been fairly stable. Balance sheet. We have a healthy, strong balance sheet. Continue to make strong cash flow. During the first half, we paid the last installment of the financial hearings and Streamfabriken acquisition, so we were able to finance that part with our cash flow. So that was 2.9 million euros. So we didn't need to raise any external capital to pay the last part of the acquisition. So that acquisition is now fully paid for the sellers. And cash flow, as said, very strong, up 35% from previous year. So the profit we're making, we are, of course, as an analyst company, we understand the value of cash flow. We're able to turn that profit that we make into strong operating cash flow.
Yeah, and here, and of course, that was the first question on my blog. Is there something unusual? You're growing to 35% on the EBITDA line, 17%. I know, of course, there's something with the depreciation, but is this a kind of some kind of cash flow ratio we should expect from the company of yours, because you have a lot of prepayments and growing that? If you make this around on the EBITDA, you also make almost twice that on the cash flow side. Is that kind of a good proxy for you, or is there a little bit phasing or maybe some lower investments in this quarter that is helping that?
Yeah, good question. I like from H1, I wouldn't make a formula that this is how it works from now on. But if you look at longer perspective, yes, we've been able to convert the profit into very strong operating cash flow over time. Of course, there are seasonal variations with the working capital and well, investments we don't have usually that much, and also the fact that we're quite disciplined in that when we sign contracts, for example, if we sign annual contracts, we usually invoice them kind of like upfront to make stronger cash flow. So that's an element we've been throughout the history very, very focused on.
And I guess, and I haven't been aware of that. That means if you can make this, you cost all your development costs. Is that correctly through the P&L? You don't take anything on the balance sheet, because then this number would be hard to reach at a good ratio. Is that correctly understood?
Yes, exactly. So all the R&D expenses are booked as expense, and nothing is capitalized on the R&D front. So
perfect.
We prefer to keep our balance sheet conservative.
Good.
Outlook, so that's unchanged. Expecting revenue to grow from last year and EBITDA to improve. Lastly, a few words on the strategy, a bit of a reminder, and a few thoughts on the equity research front, on the big picture as well. To remind you, this is the four main products we're focusing on in our strategy, and this is the product portfolio we have built over the last 5 years. So 5 years ago, we only had the equity research part. And this is something we've been building and putting together very successfully over the last 5 years. Starting with equity research, there we've kind of like in Finland reached the physical limit, I could say, of growth. With the number of contracts we have versus the number of companies on the stock exchange. So obviously in that product area, if we want to grow, And yes, we want to grow. It needs to be a geographical expansion, and that's why the strategy and the investments are so heavily focused on especially in Swedish market. In IR events, it's pretty much the same story in Finland. We have a very strong market share, and it's difficult to grow in Finland without new IPOs, but we are still growing. There in Sweden, we are also the market leader, but in Sweden, despite that we are market leader, we have very significant potential still to grow in this product category with the strong offering we have for the investor relations. AGM, again, the same story, extremely strong market share in Finland in a short time. We're still able to grow in Finland with the a bit more wider offering on the AGM front. But there again, we're piloting in Denmark and Sweden and closely looking those markets over time. In IR software, that's very Finland focused, and we still have a lot of room to grow in Finland in this product category because it's so early and doing the first pilots in Denmark and Sweden.
And there's a question there: how many approximately IR press distribution system customers do you have in Finland now, and are you rolling this out also in Sweden?
We haven't disclosed that number in Finland yet, so maybe I'll leave that away because we haven't disclosed the number. I think if I'll come back to that later on. In Denmark, we do have the regulatory approval for the product now, so we have the first client in Denmark live, and in Sweden we don't have yet the regulatory approval for the product, so we're not yet there in Sweden.
Perfect.
On the market side, so focused on three main markets. So Sweden, the most dynamic and advanced capital markets in whole Europe. That's going to be our main strategic growth driver in the strategy period up till 2027. Finland, we continue to grow with our expanded offering, and we despite the current quite pessimistic environment, we do work actively on the IPO front as well. It will eventually pick up at some point, but let's see when. And in Denmark, collaboration with you guys at HC Andersen Capital. With the equity research, I wanted to touch upon this statistics from European Commission. So they are monitoring the key indicators that indicate the healthiness of the capital markets of different countries. And one, I really like this, that one indicator they see that is reflecting the healthiness of the capital market is the analyst coverage of small and medium-sized listed companies, which is kind of like also a stamp that what we do is also noticed on a political level and important for the whole capital markets ecosystem, the economy as a whole. If you look at Finland, I'd say we've done a bit of a miracle in Finland with only 20% of the companies not having analyst coverage. So basically almost all listed companies in Finland have analyst coverage, and that's very much driven by Inderes. And looking at these statistics, we can say that equity research and investor information is not democratized in other countries yet. So there's a lot of work to do. There's a lot of potential in the market to replicate the thing we've done in Finland. And also, that being said, this is very much a game about building a new market instead of winning the competition. So we need to be able, together with the whole market ecosystem, establish a working market for commissioned research, because that is the only way to make equity research available for all the investors and all the listed companies. I haven't seen anyone coming up with any other solution to solve that problem.
No, this figure tells the story, right? If we haven't figured it out for 25 years on a non-commissioned basis, then probably it's not going to solve itself by a magical stroke. So I think you're right there. Yeah.
Exactly. And then finally, targets. So as a reminder, we aim to have combined revenue growth rate and profitability of 30 to 50%. And the thinking behind this is that if we're on that level, we can say that we're running a healthy business, and that we are good in what we do. Those two things are the things that our organization and we want to achieve, and the strong financial performance is a result of that. All right. Shall we go to the Q&A?
Yeah, we can. I think we catch a lot of them. You already answered the one I normally use. Flattish Finnish market IPO. When do you expect it to start? I think you gave the best answer. Probably everybody has. So a little bit on the Swedish side. You are talking about that it's not delivering to your expectations. Are you thinking on changing something in the model? I know you are very firm on your principles and so on and such, but is there something that you are thinking about changing, moving the Finnish model to the Swedish market to try and gain a little bit more traction?
Like the core principles of this company and the way we do equity research and that philosophy, there are some things that we want to keep unchanged, like the independence part and so on. But when it comes to, in general, the go-to-market of Inderes to a new country, we don't have a recipe for that one. We need to test, fail, and experiment and find the go-to-market model, how to establish this business model into a new country. And there, I think it will be a lot of experimentation before we find that model. We've had some learnings from our history in Finland, but it would be naive to think that the way we built this as a startup in Finland once during a different time would kind of like one-on-one work when going to another market. So we need to have a type of a startup mentality and a lot of experimentation and not being afraid to fail also when finding and learning the recipe for go-to-market into a new country.
I think that was the main questions I had on my blog, Michael. Thank you for taking us through your results and answering questions, and thank you for the people listening in.
Thank you, Michael. See you next time.
See you.